Stocks see a fall after TCS's weak show drags IT stocks lower. Energy, auto and industrials are the other big drags, while FMCG, powered by HUL, ekes out gains.
A delay in decision-making and deferment of deals causes a dip in constant currency revenues for TCS in the first quarter. The uncertainty also pushes back wages hikes and hiring in anticipation of a pickup.
Glenmark Pharma's arm inks India's first big drug licensing deal with IRDAI for an upfront payment of $700 million and a milestone payment of over $1.2 billion. Glenmark says it will be considering rewarding shareholders from the bounty.
Hindustan Unilever is set for a sudden change of guard as Rohit Java exits early. Priya Nair, Executive Director, Beauty and Wellbeing at Unilever, will step in to take charge on August 1st. The stock celebrates the entry of HUL's first woman CEO.
Zee Entertainment shareholders block a resolution for issuing warrants to promoters that would have helped them raise their stake from near 4% to over 18%. Strong opposition from several proxy advisors led to the outcome. Good afternoon. You're watching us here on Halftime Report this Friday afternoon. It's me, Mangalam Malu, with me, Vinny, as well as Ekta. We join you from CNBC-TV18's Motilal Oswal studio. There are four things that are playing out in the market right now. The fact that the Nifty has seen a sharp decline down 200 points. The second part, Glenmark up 15%, and the third part, HUL hasn't done has done in a day what it hasn't in the last 5 years. Gained about 5%. The last 5 years was up just around 8%. So what I can say is, Ekta, you got Glenmark today. I got HUL. Vinny, what do you have?
I think I'm just going to take Zee then, because that is also not doing well today. And obviously, those issues coming in where the approval is not coming in is keeping the stock under pressure.
Yes, absolutely. And did you mention TCS?
Oh, yeah.
The market has been accounted for by TCS because IT is the one which is taking the TCS stock lower.
Yeah, but nonetheless, the market's under pressure. And even if you look at it on a week-to-date basis, you can see that there's an underperformance which has taken place for the broader markets as compared to the Nifty at this point in time at current reckoning. So the mid-cap index is down around 1.57% at current reckoning as compared to the Nifty, which is also in the red for the week. But nonetheless, weekday for the markets, mid-cap index down around 0.9%, Nifty down around 0.8%. Tough day.
Absolutely tough day coming in there, but both of you all have taken the gainers of the day, right? The only two sectors that are trading in the green is the FMCG as well as the pharma, so that's what we're keeping an eye out on. While obviously not a good day coming in for IT, or whether you look at an auto pack as well, Nifty Auto, that's not managing to hold on to gains. But Ekta, we should start with Glenmark today, right? Because what a deal coming in. I think better than what everyone was anticipating.
Well, yes, and it's a big deal for Indian pharma. It puts the Indian R&D industry on the map, actually, because it's a huge deal. So AbbVie has validated Glenmark's molecule, or validated the research that they've done by paying $700 million upfront for this particular molecule, ISB 2001, which is being studied for multiple myeloma. So I haven't been able to talk about it as much, but multiple myeloma is a type of cancer, and this particular molecule is actually for those who have not been able to see any success in other kind of treatments. So it is literally the end stage or last mile treatment, and that has shown a strong response in the phase 1 data that they've generated, or the data that Glenmark has generated, and that's the reason that AbbVie has actually gone ahead and out-licensed.
This is phase 1, right, of the trial?
It's in phase 1B. So there are going to be multiple phases that they will go through, and not to mention it's probably going to take 4 to 5 years. So as they keep hitting these milestones in terms of the clinical regulatory milestones, Glenmark will be eligible for money to come through. And that total is around up to $1.2 billion. Now, the biggest kicker is the royalties, because if in case this particular drug is successful, it hits the market, it becomes a drug which you can, get prescribed. That actually is going to result in royalty payments, in possibly annuity for Glenmark. So that's going to be tiered royalty, double-digit royalty payments. So they're going to keep getting a higher amount of double-digit royalty payments. So that's the kind of deal, and the financials look, great for Glenmark if it does come through. But the big question is if, because there are molecules in the past which have not succeeded as well. So you have to keep that in mind that, R&D is a game of success. As of now, it's showing good results. As of now, there is hope. But let's see how it goes forward. Glenmark, as you can see, has already run up significantly. It's already showing another 13% gain in today's trading session. So, a couple of brokerages such as Nomura have written on it, and they've said they have a neutral and a target price of 1,500 rupees. They say that the deal value is ahead of expectations. In fact, I did catch up with Glenn Saldana and began by asking him about the deal. Listen into this exclusive conversation.
Clearly, this is a huge moment for us, right? I mean, we've been working on this for 25 years in the innovation space, and I think 2001 really is a world-class asset, right, which can be transformational for patients. From a partnering perspective, the way we've structured it is we've partnered with AbbVie for US, Canada, Europe, China, Japan, most of the developed markets, and Glenmark will commercialize this product eventually, right, in India and all emerging markets. So the two of us will make sure this asset is successful going forward. IGI clearly is a 100% subsidiary of Glenmark and has done a phenomenal job in developing this asset, getting the phase 1 data. As you know, we have phenomenal data in patients in the phase 1 trial. Where the recent presentation we made at ASCO, we had almost 79% ORR and almost 30% of the patients had complete remission. And these are patients who've gone through all prior lines of therapy in multiple myeloma and then eventually come on to 2001 have shown this response. So very exciting times. We are super excited about partnering with AbbVie, great partner. Huge global capabilities and huge resources to make 2001 successful and bring it to the market.
Okay. So explain the financials to us. $700 million is what you would get upfront, $1.2 billion in terms of milestones, and the remaining would be royalties.
That's correct. So we get a $700 million payment upfront, and as soon as we get regulatory approvals, that money will be received by us. The milestones, the $1.2+ billion of milestones are spread into clinical development milestones. So as the molecule progresses to clinics, we keep getting milestones. Regulatory milestones, so as the molecule gets filed in various markets, we get approved, we get milestones. And then we get sales-linked milestones. So cumulatively, that number comes to $1.25 billion for the asset. And then once it's commercial, we get royalties on sales, which, as you know, some of these innovative products, the life of the royalties is pretty long. So this could pretty much be an annuity if the molecule makes it to market.
Okay. So let's first understand where exactly this molecule stands. Phase 1B currently. Explain that to us. How nascent is this molecule at this point in time?
So ISB 2001 is still at a relatively early stage. The good news is we have patient data in about 40-50 patients. We have good clinical data that we presented at ASCO. So very good safety profile, good efficacy data. But it's still early stage, so it has to go through a significant amount of clinical development as we go forward.
Okay. So AbbVie is now going to take over the entire development of this molecule, we understand. When do you think that it will probably hit the market or show any kind of results?
So AbbVie takes over all clinical development from here on. In terms of time frame, I can't give you a specific time frame, but typically molecules, if you look at other assets, right, in the space, they typically take about 4 or 5 years at least to get to commercialization.
So say 2030 would be a good target to probably expect something tangible coming in from the molecule or hitting commercial sales if it is successful, that is.
So again, I can't specifically talk about ISB 2001, but typically it's about 4 or 5 years to commercialization.
Okay. Well, Well, let's talk about how you're going to use the funds now. Let's start with $700 million, 6,000 crores of cash on books. It will be on Glenmark's books. Tell us how exactly is, this $700 million going to be utilized?
So the way we're looking at it is IGI will continue development of various other assets that they have. They have a great multi-specific antibody platform technology, which they will continue to exploit. And, they will continue. So they spend about $70 million a year. So that spend will continue. Clearly, a big part of this upfront will be allocated to their spends. The balance, some of it will get dividend out to Glenmark, and the rest will sit as cash on the books.
Okay. Any plans of rewarding the shareholders of Glenmark who waited very patiently for a possible R&D deal?
We'll definitely consider, right, increasing the payouts to shareholders. I think we'll put it up to the board and get that approval.
Okay, so that's the big news coming in from Glenmark. The stock, remember, has rallied around 50% from its 52-week low, trading at over 30 times 1 year forward at this point in time. We'll take a short break, but on the other side, we'll connect with Mr. Vedish. He's the former MD at GSK Pharmaceuticals to discuss the entire R&D landscape post this deal in India. Stay tuned.
Welcome back. We've been talking about Glenmark Pharma. We've heard from the management as well. The big stock of the day, it was up 10% for most part of the day, and thereafter the temporary freeze on F&O opened, and thereafter the stock went all the way up to 15% before now settling at around 12.5% in terms of gains. We have with us Annaswamy Vedish, who's the former MD at GSK Pharmaceuticals, who joins in. Mr. Vedish, always a pleasure listening into your views. This big deal that has happened, it's a big one for the Indian pharmaceutical space. For Glenmark in particular, do you think the valuations are more than what the street anticipated? Does that tell you that the possibility of success here is a lot higher? How do you look at this entire space, and who else stands to benefit from something like this?
Well, first and foremost, my hearty congratulations to Glenn. See, what you're seeing today is a resultant of a huge hard work that happened for over, if I'm not mistaken, it's over 10 years. So we are talking about hard work having paid dividend. Particularly in drug discovery, things don't happen overnight, right? And it involves a huge amount of risk. So the first one is ISB 2001, first-in-class tri-specific antibody for multiple myeloma, and being taken by AbbVie itself, it clearly shows the credibility of the platform itself. So to that extent, I think India is really making an impact in the drug discovery, though it's not the full length of the drug discovery value chain, but at least now we are becoming a country that many companies in US or the Western world will look at us. I'm going to stop here and let me know what exactly you want to know about this deal.
Okay. Mr. Vedish, hi, welcome to the show. Just wanted to understand what this means for the R&D landscape for India. Are we on the map now when it comes to R&D, or do you think this is very company specific?
Ekta, you know it, and you know this space quite well. See, drug discovery, as you know, it's a very expensive proposition all over the world. It's not everybody's cup of tea, right? And including countries like China, Korea, they're all investing. As a country, they're investing behind drug discovery, particularly in the biologic targeting on the immuno-oncology or some of the diseases that requires huge amount of unmet need that has to be, driven by the companies. Now, as far as India is concerned, I think what Glenn has done, and I know very well, is that he's one of those leaders who always believed in innovation even before anybody else was thinking about it, almost about 10, 15 years back. So frankly, in my opinion, right now, there are a few other companies that are also spending enough resources behind it, particularly in the early stage discovery. And I do believe that this is a clarion call for Indian pharma companies, but I do have few suggestions as we discuss.
Right. Mr. Vedesh, good afternoon. What is, like you're mentioning, there are few companies which are already, in the works as well. We have Walkhard, we have Spark that are doing a lot of R&D going on that front as well. Now, in terms of overall, do you think such a large deal that we saw coming in for Glen, is that something that's going to be possible? Or how are we watching out for in this space now?
See, what you have seen today is a typical biotech story, right? If you, even in US, many other biotech companies, like what Glenn has done it through this separate arm. Many biotech companies work, out of which 100, one or two succeed in coming up with phase 1 and then they go to the phase 2. So frankly, in my opinion, this is a start for our country and this is going to inspire many companies to do it. If you are asking me, are there any other companies that are on the verge of making it happen? Possibly few of them, but I would say you should take a look at their pipeline. It may not be as big as this, what you just have seen, but I'm quite sure that it's going to inspire many companies to start looking at how do we cooperate, how do we collaborate with multinational companies, particularly in the area where the AI is becoming a very important component in drug targeting. So India is going to be in a very good position in accelerating drug discovery, but we are at the early stage, but it's good news.
Okay. Well, Mr. Vedesh, a lot of Glenmark's research is done outside of India. What do you think needs to be done in order to increase or encourage indigenous R&D?
Ekta, you said it correctly. So first and foremost, in the Western world, the drug discovery ecosystem is highly evolved. So first and foremost, we need to create the ecosystem here, particularly the academia and the investors. In a Western world, the investors come in very quickly to support any idea, even if there is a 1 in 100 chances they will support the discovery, right? And then obviously the trained professionals and the regulatory pathways are very clear. So frankly, in my opinion, if it has to happen indigenously, we definitely need to develop a far more robust ecosystem, replicating what's happening in the valley. That we need to start doing it here, but it's going to take some time, but it's worth an effort.
Right. How much, roughly, according to you, would be the investment that would be required from the ecosystem to actually develop something like this in India?
See, typically, as you know, any drug discovery in Western world, they calculate something like a $4 to $5 billion, including some of the risk that is involved in coming up with, out of 100, 2 or 3 will see the light of the day, right? So the way in which we look at it, we are talking about 5 billion. Maybe in Indian system, our like how in the space area where we do it much cheaper than the Western world, possibly we can do it, it's my guess, 1/5 or 1/4 of the cost. But 5,000 crore that is being given to support the innovation, it's a start, but that's not sufficient. You need much bigger investment to drive drug discovery in the country.
Okay, all right, Mr. Vedesh, we're going to leave it on that note. Thanks very much for joining in, and I'm sure it's a conversation which we are probably going to continue having, that how exactly do we fuel R&D further in pharmaceuticals in India. Well, remember, as we need to take a break, remember to tune in to the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m.
Welcome back to Halftime Report on CNBC TV18. Now let's talk about some of the gainers in today's trading session. And other than Glenmark, we have HUL that is buzzing in trade as well. And this has come in after we've seen the appointment of Priya Nair as its new managing director. Mangalam, Rohit Java, after his short stint, has, stepped down. But stock reaction positive. Priya Nair, what are we expecting here now going forward?
So the one thing that I've noticed, tracking the FMCG space, the biggest inflection point in any consumer company happens when the management changes. Because everything else considered, these are large companies with very strong processes. Will a management change bring a different direction of growth or not? Is the big question that everyone's looking at. And this has to be looked at in the context of what has taken place in the last 5 years or so. The stock has done virtually nothing. The last 2 years, we've seen a massive amount of disruption in the consumer space itself. The macros were extremely tough. And Rohit Java had just come in after a stellar career by Mr. Sanjeev Mehta. So for all things considered, if you look at those numbers, it has been a very resilient performance by Rohit Java. He's spoken about volume-led growth through Aspire and looking at margins as well as an improvement trigger from here on, given the volatility that we've seen in raw material prices. The stock has moved higher on account of two reasons. One, now the consumer sentiment is turning. Secondly, the stock hasn't seen literally time correction for the last 5 years. And thirdly, with the management change, the street believes that maybe it'll be more of the same with an added growth impetus that will take place in HUL. So Rohit Java stepped down with effect from July 31st. It was a surprise step down. Priya Nair has been appointed. She's currently the Executive Director, Beauty and Wellbeing, Unilever, and now comes back to India after, being in India for nearly all her life. 1995 is when she joined, and she's known for increasing the digitization, premiumization and brand building, particularly in the home care space. She's the first woman CEO of HUL. First time, but I think it's about time because the kind of leaders that HUL has spawned across, you have Prabha Narasimhan, who's leading Colgate, currently HUL leader, Geetika Mehta of Nivea, currently HUL leader. So you have a bunch of leaders from HUL who are now leading other companies. So it's only about time that where consumers, nearly 6 out of 10 are women, the leader has to be a woman as well. In the last 5 years, like I said, the stock is up just 8%. And this is before today's 5% up move. And in the previous 5 years before that, the stock had rallied about 4 times. So there's time correction, valuation correction, and tough macros. What is it that is important to track from here on? Recovery in volume growth led by consumer sentiment. That'll be the most important thing to track. Second thing, growth in premium personal care brands, because that's something where, HUL has been losing market share to some of the D2C players, and premiumization is margin accretive. And finally, I'll personally be keeping an eye out on what they do in the foods business, because the Horlicks growth post-acquisition has not been to what the analysts had been expecting. And now with the demerger of the ice cream business, what is it that they will do to increase the innovation out here is something I'll watch out for.
Okay, all right. Well, thanks very much for that, Mangalam. So that's on HUL, the stock. In fact, maybe there was a little bit of an inkling of any kind of news coming, considering that the stock is up around 7.5% this week. It's up close to 10% this month. Well, let's move on to the other big Nifty stock in focus, TCS. The stock is under pressure post their Q1 numbers. Rima and Prashant caught up with the top TCS management to quiz them on their Q1 performance. They began by asking them about the decline in constant currency revenue. Listen in.
First of all, you need to decipher the number. This also included a minus 2.8% of BSNL degrowth. It's when I say degrowth, it's nothing wrong because we more or less completed the initial phase of the program. So there's very small portion left, and international revenue went down by minus 0.5. And like I was telling Rima before the this interview, we probably would have felt somewhere around another 100 basis point is where we were thinking we will close the quarter with. But even during if you remember in April, we did talk about continuing uncertainties which we are not seeing in January, February, started coming back in March. So that continued, and then we saw more projects getting delayed, paused, decisions delayed, So collectively, and there are certain customers wanting to conserve cash. I think it's a question of overall global uncertain macroeconomic situation. But
the BSNL deal, I mean, there was well understood that it is ramping down, right? That's coming to a close.
Yeah.
So that was anyway supposed to happen.
Yes,
I think
absolutely,
the numbers
absolutely. I'm not saying that
over
as a,
700
that's what I'm
crores.
saying. See the numbers in the context of minus 3.3, in the context of how much is the BSNL ramped down. And as I said, international, maybe another 100 basis point, I would have been happier. But this is the uncertainty like that or the unexpected nature of the overall customer's decision making behavior that delayed things.
So how many deals got paused, deferred, any cancellations?
Not many cancellations, but delays, right? Like there are situations, see there are sometimes where you have about 1,000 people working on a project. Customer decides that they can go slow and then they say, I don't need 1,000 people, I need only 500 people for the next few months. And they're willing, because of the overall situation, they see they can deprioritize or postpone the programs. So I don't want to quantify how many, but few.
But what led to the disconnect between your own expectations and how the quarter played out? Because even when we spoke last time, that 90-day pause, tariffs being was there.
See, we in fact, if you remember, last time I was telling that I was expecting this to be short-lived. Yeah. Okay, it was not short-lived as I thought. It's continuing. Like if you, we hope that sentiments revive soon, but.
So you think Q2 is also impacted? I mean,
too early to call. One, you know that we are not going to comment on Q2. But see, the overall situation, we have a good pipeline, good order book. We are winning reasonably well in the marketplace. So once the sentiments improve, we should be in a good position.
No, but there's no sign from the there's no sign from your clients who've paused the deals that they want to restart anytime soon.
Not immediately.
Not yet.
And last time you told us that those pauses are tactical in nature.
Yeah.
I mean,
Yes.
they're not.
Yeah. Even now I'm saying because last time also I said, now I'm saying most of the companies have a huge technology debt. They have to spend. It's a question of timing.
Arthi, it's interesting, as they say, may we live in interesting times, right? And these are interesting times. And how would you characterize the environment in terms of what you've seen in the company so far, and what are you driving at within the company?
I think, like you said, I think these are interesting times. And if you look at what my focus is, we're looking at driving growth across our service lines. Like Kriti said, this quarter, if you look at it, our new age services have grown. So if you look at whether it's AI, it's cybersecurity, or interactive services, many of the new age services are doing well and they have delivered growth this quarter. And specifically, since AI is a topic that everybody is most interested in, and if you look at AI, this quarter, if I look at where the growth has come from in AI, I would say that it has come from 3 areas. One, industry-specific solutions that our customers are building. Second, Kriti talked about technology debt, so customers are turning to AI to really modernize their technology estate. So I think that's an area which is showing an uptick, especially in some industries. And I would say the third area is where, as you start moving from pilots to more scaled ROI projects in AI, customers are looking at how do you do this at scale. So looking at...
Is there a way to define AI revenue? I mean, this is what we earn because of AI projects.
See, we're not doing that for a reason, because AI is all pervasive. Sure. It's there in every service line. So it's hard to just call out a part of the revenue as a AI revenue.
Is it deflationary in terms of pricing?
No, I don't think so.
Okay. Because revenues, the top line it'll drive, but I mean, and we've discussed this in the past, that as we go forward, eventually customers are going to say, well, you're doing a lot more with a lot less, so well, give us the price advantage that you're seeing.
It won't be a deflationary in pricing like Arti mentioned.
Okay.
But we believe that AI will enable you to do more than with less. Okay, but as I've been telling, eventually you'll be doing a lot more than what you're doing today, because that will ensure that we have enough opportunity for what we have today and what we'll have tomorrow.
Right, that is the management of TCS speaking to CNBC TV18. Meanwhile, at the bottom of your screen, there are flashes. VIP Industries, promoters looking to sell stake in the company. They're in talks. What we understand from our sources is that leading private equity investors, including multiples PE, are likely in the race. And remember, as the deal would happen, promoters who own 51.7% stake in the company, this deal is likely to, trigger an open offer for minority shareholders as well. So, short point. Promoters for VIP are in talks to sell stake in the company. Leading private equity investors, including the likes of multiples PE, are in the race. And more importantly, it will trigger an open offer for the deal to happen. CNBC TV18 has written to both the companies. We are awaiting their response. Remember, promoters in the past have alluded to exploring stake sale due to lack of succession at the promoter's end itself. And that's reflected in the share price as well. The fact that there is a deal brewing is, telling in the share price, because despite weak numbers over the last 3 months or so, the stock has recovered 75% from its 52-week low. But over the last few years, if you look at it, the highs that it hit in 2021-22, it's still down about 36% from those levels. And it has been losing market share. It's been losing market share from an investor standpoint and the marketplace as well. If you look at the last 5 years, VIP shares have rallied about 82%, and this includes the COVID lows. From there, you have someone like a Safari, which was much smaller, has rallied all the way up to 1100%. So that's the underperformance that we've seen in VIP's share price as well. What is it that is important to track from a VIP perspective post-deal? They've been losing market share, so revival of brand VIP and growth in Skybags as well as their premier offering Carlton, something we'll be watching out for. In CSD, the Army CSD, they've been losing market share to Safari. Can they grow there and in general trade along with e-commerce channels? And in e-commerce channels itself, you have these newer brands, the likes of Mokobara, you have Uppercase and other newer players who've flooded this space, which was ripe for disruption. The disruption has happened, unfortunately not led by VIP Industries. So the new buyer, whoever that is, will have to take note of all of these things. The stock has seen a bit of a spike, but remember, is already rallied about 75% from its 52-week low. A deal likely soon.
Okay, all right, Mangalam, thanks very much for that. Interesting to know who actually will buy VIP. If it's a private equity firm, what kind of strategy will they adopt in order to change that kind of losing market share that you did allude to? Well, we need to take a short break, but Manisha Gupta will join in on the other side to talk about what she's tracking in the commodity space. She has with her Ruchi Shukla, the head of energy at MCX. Stay tuned.
Welcome back. You're watching us here on Halftime Report, and this is that time of the day where we speak about commodities. But before that, let's wish our golden girl a very, very happy birthday, Manisha, July 11th. Your birthday. Don't want to ask you your age.
No,
the only thing that I want to ask you is, are you going to give us your age equivalent of gold?
Weight equivalent or age equivalent?
Age equivalent, weight equivalent. I mean, if you must, that's okay. But age equivalent in terms of grams for maybe silver, gold, or something.
But what are you What are you gifting yourself? Which commodity are you buying for yourself?
Well, I'm hoping diamonds, but let's see how that budget stands by the evening.
Real or lab?
Real.
Right, but wish you a very, very happy birthday, a glittering birthday, and something that shines, something that always sparkles, and something that never goes down in value.
Thank you so much. That's very, very kind and very, very nice of you. Thank you, guys. Thank you for wishing. But let's get to electricity futures, and joining us now to talk about that is Ruchi Shukla. She's head of energy at MCX, and she joins us on the show now. Ruchi, hi. Congratulations are in place, because a lot of people that I have been talking to tells me that Ruchi's worked hard, and it is all because of Ruchi that we have electricity futures right now. Congratulations on that. It's the second day of trade now, and I've been talking to a lot of broking houses as well, which tell us that they're watching right now on how the price moves, etc. It's of course a great plus for the Indian economy. We are the third largest consumers of electricity. What has been your feedback in the last couple of sessions now?
Yeah, thank you, Manisha, and wish you a very happy birthday.
Thank you.
So electricity futures, with this launch, we are providing really it's a transformative movement in the power sector because it's providing the market participants with a very robust and efficient risk management tool. And as we are seeing yesterday, the first day, we had it was around 4,600 plus lots which traded, a good traction, a widespread traction, and we are seeing the interest from the market, specifically the value chain participants, which includes the generators as well as healthy participation from the end consumers also. So with seeing the first day, it's been a good startup for this contract, which has awaited a large number of years till date.
Absolutely. Ruchi, also, you're not the only one doing it. You have a competition standing right besides. How are you working that on?
Yeah, this, truly speaking, Manisha, power sector is a very wide market. It's like a huge market and there's a lot of space and lot of new reforms or a build-up that can happen. So I guess with the competition also in place, this markets will grow and deepen further, bringing in higher and higher liquidity and more efficiency.
You said for yesterday was 4,600 contracts. Is it the same enthusiasm? Do you see it today too?
Yeah, the enthusiasm is good today too. And since morning, we are seeing around 500 plus lots have already traded since morning. So that's a good one. Good pick.
We do understand, Ruchi, that a lot of learning for this has come in really from Japan and perhaps South Korea for that matter. How is the Indian contract devised? It is on, of course, the underlying is IEX. How are you working that on?
So while these contracts were designed, a lot of interaction went through with the value chain shareholders as well as the global participants. And the design, which is formally got approval from SEBI and CRC, has been on the global parlances because we have seen the countries like Europe where these contracts have really done well. The power futures as the leading market in Europe and Japan. So our contracts are also designed accordingly, but we have understood the nitty-gritties of Indian markets also because these are the contracts which are impacted by more so on the domestic prices. So the international prices impact is very less visible in these contracts. So the design is peculiar for the Indian markets as well to suit the Indian participants. Basically, if you see, we have kept a lot size as a small lot size of 50 megawatt hours, keeping into specific the picture of SME and MSME companies. They also have a lot of exposure to the power sector, the power prices, so they can manage their risk better, and which will provide them more on financial planning and resilience also.
Ruchi, we do understand that from power generation companies to power distribution companies to proprietary HNIs, and as you said, SMEs, MSMEs would also want to be part of it. And then perhaps retail would enter in because it's not such an easy subject. I mean, it's not like gold, silver or a copper or a platinum. It's electricity futures is slightly has a longer learning curve, would you say?
Yes, you have rightfully pointed out electricity futures is going to have a little longer term and it's visible from global markets also. They have also taken around a larger gestation period to develop into further nuances and the further variants for this product. So similarly, the curve in Indian markets will also evolve, though we see it will evolve at a faster rate because the growth rate which India is growing at, and we are moving towards the vision of Viksit Bharat. So with that, the evolvement will be at a much larger pace from the global markets. And it will be a mix of participants going ahead. We will see value chain to start off with, but yes, financial institutions and retail users, once they understand how the price impacts are visible on the volatility and the price impacts are visible in these prices, it's going to be a good market. That's what we foresee from here.
Sure. Ruchi, we do understand that it's available for the contracts, that is available for all 12 months going forward, but it is the front 3 months which are active right now. Is it just the front month or have you seen activity happen in the further months as well?
So going ahead, we have launched actually 3 contracts right now because the 4th one will become active from 1st August. So we have seen traction yesterday in all the 3 contracts, which again shows a good healthy sign on the first day if you see traction from in farm month contracts also.
Okay, that's an interesting conversation there. Thank you so much, Ruchi Shukla, for joining in with us on the show as well. And obviously, interesting launch coming in there as well. So interesting conversation. Thank you so much for that, Manisha, as well.
Manisha, no gold, no silver, but lunch, is that a possibility?
After you come out of this show?
After we come out of this show. Perfect, done. All right.
But for now, let's go for a break.
A lunch break, and we have Sudeep Shah of SBI Securities joining in with some trading strategies on the other side.
Welcome back to Halftime Report on CNBC-TV18. Right now, the Nifty is at 25,100, just 180 levels is what we're keeping an eye on. Almost in the days low, so not much of a recovery there. But we have Elcon Engineering that's reported their Q1 numbers as well, and increase in terms of profit. There's a one-time gain of 80 crores as well. As of now, the stock has seen a bit of spike up coming in. We'll wait out for more details on that front. But let's move on, and we have sources telling us that the IRDAI has initiated the process to take action against 8 insurers where each found lapses in health portfolio. Yash is joining in with us to give us more details on this front. Yash?
Well, that's correct. So, of course, the process has been initiated from the desk of the insurance regulator, IRDAI, and this is with respect to its inspection that it had conducted in the health portfolios of about 8 insurance companies where it had found lapses around multiple things. Of course, one of the most important things there was implementation of the Master Health Circular. Now, since the inspection was done, lapses were established. What IRDAI has done is that it has initiated the process to issue show cause notices to all these 8 insurance companies. Which are these 8 insurance companies? Niva Bupa Health Insurance, Star Health Insurance, Care Health Insurance, Manipal Cigna Health Insurance. These are 4 standalone health insurance companies against which the process to issue show cause notices has been initiated. There are 4 multi-line general insurance companies also where similar process will be followed to issue show cause notice. These are ICICI Lombard, Tata AIG, New India Assurance, as well as HDFC Ergo. Now, as I said, violations have been with respect to implementation of Health Master Circular, also around unnecessary deductions, claim rejections, delayed claim settlement. What we've been given to understand is that IRDAI will be discussing the matter on issuing these show cause notices in its upcoming board meeting. That is likely to happen next week. There will be a panel which will approve, issuing the show cause notices, after which in about the next 1 month is when we are expecting these show cause notices will be sent to both general and the standalone health insurance companies. Post which, of course, there could be a reply which would be awaited naturally from these insurance companies on the show cause notices. There could be hearings if required from these insurance companies. And then if the IRDAI establishes these violations in a more firm way, then penalty as well as, asking them to return money to policyholders are certain steps which could be considered by the insurance regulator.
All right, we take that point, Yash. Thank you so much for that. That's about the insurance story. We'll keep an eye out on that as it develops. But just watch out for the markets. We have a 180-point downtick that we're seeing on the Nifty. It's actually at the lower end of today's trading range. The Nifty led lower by the Nifty Bank. We're seeing weakness in the mid-cap index, the IT stocks. All of them are taking the frontline index lower. But from a technical standpoint, we are at quite a precipitous level. The Nifty Bank has seen a recovery from the lows as you saw in the intraday chart. But look at the Nifty. After a very, very long time, it's gone ahead and broken the 20-day moving average. So the Nifty 20-day moving average comes up for you on the screen. It is 25,244. That's the mark that we have to keep an eye out on. It's below that. Closing above that would signify a reversal in trend for the market and maybe a move towards its earlier high. But right now, we're looking at 20-day moving average being broken. And that's because the 50-day moving average has been broken on the IT index. Remember, the IT index has been underperforming, still down about 17% from its highs. So it's broken a much longer frame average. The Nifty Bank, however, it's recovered from the 20-day moving average. 56,630 is where the Nifty Bank 20-day moving average is placed. So that's a little more resilient than the IT index. It's the IT which has caused weakness on the Nifty. The other thing we're watching out for, HUL. The reason why the stock's doing a lot better is also because in today's up move, it's conquered the 200-day moving average. The India VIX, which we've been pointing, has been very, very low. After this downtick, has spiked a little, but still factoring in a fair amount of complacency. So let's watch out for where this goes. And the 25,000 mark is also very important. We have the 25,000 put writers very, very active in today's trading session. We have the 25,200 call writers and the 25,300 call writers equally active, telling you that the support has moved lower, as has the congestion zone. So the congestion zone, which was earlier about 25,550, 25,650, has come down to around 25,350 odd itself. and as a result of which the put call ratio has moved to 0.75 versus 0.95. Remember, the market typically shows a bounce from 0.68 to 0.7. A lot of long positions added in this market as well, and some of them belong to the Mankind Pharma group. That stock has seen a lot of long positions being added. Shorts added in a couple of these capital market plays. So we have CAMS and BSE seeing shorts being added. IRDAI on the back of higher gross NPAs seeing some shorts being added. And we've been talking about Glenmark for a while. The open interest action on Glenmark suggests that the stock may enter F&O ban. So just watch out for that one as well. So Glenmark is a stock that may enter F&O ban, the third stock in the series to go into F&O ban.
Okay, all right, Mangalam. We'll do one thing on that note. We'll take a short break. But up next, Sudeep Shah from SBI Securities will join in with some trading calls. Stay tuned. Welcome back. Sudeep Shah joins in to discuss the technicals of the market. Sudeep, welcome to the show. If you could just apprise us of your Nifty call as well as your stocks.
Good afternoon, Ekta. Ekta, what we feel is from the current levels, while Nifty has broken its 20-day exponential moving average, and now it's just come back in that range between 24,950 and 25,300. We feel there could be a retest of this support zone of 24,950, 25,000 on the downside. And remember, this is the support zone is the same support which was a prior resistance in the month of May and major part of June. That 25,000 mark, which we always used to discuss, that's not able to get crossed. We feel now that could act as an important support on the downside. So 24,950, 25,000 zone is that zone where Nifty could find support, and it could be range bound between 24,950 and 25,300, 350. If we see the other indices within the other sectoral indices, Bank Nifty is say relatively more stronger because it's still sustaining above its 20-day exponential moving average, and support could come from FMCG as well as the oil and gas index, which is still doing relatively well. And auto as well as IT indices are on a weaker foot. So considering all these five indices put together, we feel overall indices, the broad-based indices could be in a range between 24,950 to 25,000 and 25,300, 350 on the upside.
And individual stocks quickly before we let you go, Sudeep.
Mangalam, two stocks that are coming on our radar. One is PFC. Now here there is a reversal that has been witnessed after several sessions, and the stock has now sustained above its 200-day moving average after several months. So the kind of price action which is visible today in such weak markets does show some strength. And that is why we feel from the current levels, PFC could be bought with a stop loss at 428 and trading target of 453 on the upside. The second stock is from the chemical space. Of late in the last several sessions, we have seen a lot of chemical names showing good traction and showing decent momentum. So one of them, a good quality fundamental stock is Fine Organics, where we have seen a decent base building happening in the last several months. And now the stock is ready for the next move. So around 5150, 5170, the stock is trading currently. From a medium-term investment standpoint, we feel that 5,000 could act as a strong support, a stop loss on the downside. And we are looking at targets closer to 5,400, 5,600 in the coming few months.
Okay, Sudeep, thank you so much for joining in with us on the show. But with that, we'll wind down this edition of Halftime Report on CNBC-TV18. Thank you so much from Mangalam, Ekta, myself, as well as the team who put the show together. Don't go anywhere. Your business lunch up next.